Be here in a minute.
Sounds good. And we are live.
Mark must have his selfie stick.
Yeah, he's establishing his connection. One of these times he's going to be like up on the Eiffel Tower and just logging, have a selfie stick from there. And then next week he'll be on top of the Space Needle coming and saying hi.
Yeah, it'll be where in the world is Mark today?
Where in the world is Mark Sumberg?
You probably remember that, right? Where in the world is Carmen? What was her name? Carmen, whatever.
Carmen San Diego.
Yeah. There it is, Carmen San Diego. Yeah, that was the kid show way back when.
Yep, that was
good.
One of
I
the
watch my kids all the time. Yep.
Yeah, that was when my kids were young.
Mm-hmm.
Yeah. You guys making me feel all old. Where in the world is Carmen San Diego? Welcome to the
we
show.
feel old. Believe me, we feel old. You shouldn't feel old. We feel old.
Hey, we still remember Captain Kangaroo, so hey.
Yeah. I remember
Bozo the Clown.
Kangaroo
and
Jack.
Bozo the Clown, Captain Kangaroo.
Remember Kangaroo Jack? The boxing kangaroo movie?
Oh yeah.
What's it called? I think it was
Kangaroo
Jack.
Yeah, that's right.
Yeah.
Yep.
Yeah, I wasn't allowed to watch that after the first time because it was there was like swear words in it or something. So, yeah.
Yeah. Kangaroo reminds me of that. Go ahead.
No, you're all good. It is Thursday, 8 a.m. my time, 10 a.m. Joe's time, and Mark, you're in Colorado, right? So you're hanging about 9.
Boulder, Colorado. Yep.
9 a.m.
About 62 degrees, feeling good.
Yeah, look at that nice weather out there, nice pretty trees.
Yeah, do you still have a peek at those mountains? Maybe not. We come on here every Thursday. Yeah, no, you're good. We come here every Thursday. Oh, yeah, look at that. That's fantastic. Nothing but blue sky. Eleanor says, good to see Joe smiling. Was concerned.
Yeah.
Yeah, I wouldn't be smiling too. How are you feeling? I guess before we get started, is that from Marion?
No, that was Mark.
Mark? Oh yeah, I remember.
Well, let me tell you,
the little cast on the teddy bear's leg.
Yeah, I had my medical thing yesterday, and they X-rayed the leg, and they said it was in good shape. They took out a bunch of pins, I think 8 or 9 or 10 pins, and that's all it was. So there's nothing left there, and they redid all my pills, and I still got the 2 therapists come once a week, and my new Swedish shower partner comes once a week. She actually comes today. In fact, if you notice, I have to leave early. It's because
is insurance paying for that, or?
Well, absolutely, yeah. It's international policy. Yes, and
yes.
No, so I actually don't have another appointment for a month. So, but I have to take all these pills, and I have to do all these exercises, and it's still not. I mean, still can't walk without the walker, but it's getting better, and get awful tired. Get really tired. But other than that, yeah, things are progressing.
Especially on the road to recovery.
Let me tell you how
first little bit there.
Let me tell you how we did today, okay?
Please do.
And all this was slightly before the really last few minutes of terrible things down in Afghanistan. But anyhow,
and this was on micro moment trading, which Mark is a coach on.
Micro moment trading, which is our every market day, which is most days. It starts at 8:30 Central Time when the market opens, and lasts till 9:30 Central Time. And we are up so far this week through the end of today's session, 184.9948. I said through the session, I said over 200%. What's true? That's wrong. It's 184.9948 just through today. Huge. So we'll go over 200. The week we were over 400 last week, huge week. And but we had 49.2671 today over 15 trades, split about 50-50 between Apple and others. So we're just, every day we come on and kind of read what the market looks like. It's always, all kinds of ups and downs and everywhere, and we don't really care because we don't trade. We trade volume. We don't trade individual stocks. We don't worry about individual stocks. We trade indexes. We always just want something. We trade Apple because we kind of look at it like an index. And Mark trades QQQ, Tim trades and Cezanne trade Apple. And, it's just great times for that technique. And we're just not burdened by everything day traders have to look at who lose 85, 90% of their money according to CBOE. And we are into tomorrow ends our 120th week as a subscription service. We've been doing this for about 5 years in-house, and we still do. These gentlemen, Mark, Tim, Cezanne, trade our money as long with theirs. So these are real trades. And if you want to learn something, and you can really learn it during those sessions because they explain to you exactly precisely how to read our proprietary trading system that tells you when to get in and when to get out, and that is all there is to it. You don't have to be concerned about anything else. End of message.
Absolutely.
Yeah.
I wanna clarify something about MMT that's just that I've been I've kind of got, I think we've all gotten used to MMT and the nature of that. Oh, Mark, I was going to interact with Mark about that. I think we've all gotten used to the nature of MMT though, and how it flows, how it works. We've been doing it every day for a long time. And so it kind of gets normalized to us. But I often don't think about how much it just takes out of the way, how many obstacles it takes out of the way, right, just by trading it, right? Because I often say that everyone's in the market, everyone's doing all of this trading and teaching and interacting, and all they're really trying to do is figure out if something's going to go up or down, right? Just up or down. That's it. And then all that has to do is with timing, because something goes up and then down. So all of the craziness and billions in the market is literally just the timing of if it's right now going to go up or down. And just by being in MMT, we're literally avoiding 90% of what all of the focus and the concern and the stress is about the market. Because when we say we don't care if it goes up or down, obviously we do. We need it to move to make the trade, right? And if it's going up, we're going to trade it on the upside. So we have to be able to identify that. But what we mean is, unless it's over that top Bollinger Band, which if you're in it, you know what I mean. If it's over that top Bollinger Band, you're never trading a put. You're not trading a put, right? If it's over the upper Bollinger Band, we're trading a call. So there's literally a line in the sand saying if we are over this line, we are trading on the upside. And if we are under this line, we are trading on the downside. It's a clear, no sort of, up to interpretation thing that takes out all of that main concern that this whole market is about, that all the news channels talk about all day, every day, billions of dollars. That's what we mean when we say it doesn't matter if it goes up or down. We just want volume, because once it is moving strongly and sharply in one direction, we can see that, and then it's just a matter of how much it's going to move. But already we don't even have to decide if we're going to the up or the downside. Go ahead, Mark.
Right, because we take advantage of the trend, right? We're going for the trend. We don't care if it's up or down. We want to jump on that trend, take advantage of it, get a profit, get out. We don't hold positions overnight. So, it's no significance whatever the market does in the middle of the night till we wake up. Sometimes it's down or up. We wait for the market to open, and that's usually our best opportunity to get in there and take advantage of those trends and make our profits and be done for the day, in an hour.
Yeah. And Mike, don't forget to ask Mark, because he's starting here on, I think, September the 11th, a new service from our company, Futures. And I don't think we've mentioned it on here. And Tim also, but Tim's not here, so he can talk about it. So.
Yes, absolutely. Yep. We got that coming up on September 11th. Mm-hmm. Mark, did you want to cover that now or a little later on?
We can. So we're talking about it. So futures we're bringing out MMT futures. We're going to introduce those. using the charting that we have put together for the MMT micro moment trading. Same charts, but using the futures index is what our focus is going to be. These are cash settled instruments that are settled every day at 4 p.m. Central Time. We're able to take advantage of the market virtually 24 hours a day. There's about 1 hour where the market closes during that time, the futures market, so it can settle out all the cash transactions that it did during the day, and then starts back up again at 5 o'clock. So typically in the morning, you get up, you look at the futures, and see them, right? Which tells us kind of what the market may be doing or what it might be doing when it opens. And then again at 5 p.m., you'll notice they start talking about the futures again in Central Time, because whenever reopens again, the futures markets. Allows us to get in there and take advantage of the trends, much like we do with the micro moment trading with options. But in this case, it's an actual futures contract. It's much more leverage, so you can open an account as little as $500 to as much as $5,000. And trading just one contract, like this morning, I was able to pick up a little over 50 points in an hour for the NASDAQ times 20. That's $1,000 that I made right there, using a $5,000 account. So do the math, and you can see that the returns can be pretty stellar. You know.
Wow, that's fantastic. Yeah, can you kind of tell us? Obviously, not what your process is, but kind of your analytical and creative process on separating it from micro moment, and how you've seen it's a little bit different. What it's been like building out that technique.
Yeah, so with micro moment, it's similar, right? I mean, we're still following a chart. Everything we do, even Randy's techniques or this technique, the micro moment trading, it's still following a chart. We still use our proprietary charting instruments that we've developed over the years that allow us to quickly analyze the market direction, and we take advantage of that trend.
Oh, looks like he's muted.
Hey, we can't hear you.
Connection's a little rocky.
Sorry, can you hear me now?
Yeah, hear you now.
Okay, sorry, I had a call come through all of a sudden on my phone. Sorry.
Oh, gotcha.
So we use the MMT charting just like we do for all of our other charting, the advanced charting techniques. And also indicators in there allow us to, quickly make a decision and take advantage of that trend. And it's really the same thing with the futures. The futures just allow us to create more leverage and trade the market, 23 hours a day instead of just quickly in the morning. We could do that also. We'll still take advantage of the opening market. That's still the best time. But in this case here, there's more leverage and there's a few nuances to actually entering the trade and exit the trade. We have some stops that we'll use in place in a bracket order to allow us to protect ourselves should there be some market movements. Like in the case of today, if we were on the wrong side, it would stop us out immediately and get out, so just in case. But anyway, nice. It's a great new technique for those of you that have never traded futures. I think you'll find it very interesting and very dynamic. It's kind of fast-paced too sometimes. So it should be a lot of fun.
Micah, there's a question down there from Daryl for Mark. Yeah. There you go.
Mark, at what point are the Bollinger Bands too close to each other?
On my phone here. Yeah. This Mark, at what point are the Bollinger Bands too close to each other in order to trade? Okay. Oh yeah. So when we look at our Bollinger Bands when we're trading, the micro moment technique, you'll see them pinch together. This indication that the averages are becoming more and more flat. Essentially, there's not much change in the market. But I look for anywhere from 60 cents to maybe 40, 30 below. That's just really hard to eke out enough profit to make any or to make enough profit. There's not enough movement, not enough momentum in the market, so we pretty much stay away from it at that point.
Yep. Is there a certain threshold that it's too narrow? I guess it's dependent. It's all relative to the volume of the day. Sure.
Yeah. He's having
some trouble.
Yeah.
Daryl. There's not a specific threshold as well because of.
You guys hear me, but it sounds like slow motion speech going on in the background.
Oh, you're all good. No problem. It's relative to the movement of the day, right? So sometimes you have days like this on SPY where you'll have a $2.50 movement in 4 minutes. Well, what did we just drop? That was 4 minutes. We went from 448 to 446. So something like that, the chart is going to look very similar because every chart has kind of an auto zoom feature to keep it framed upright. But the actual size of the movement of the Bollinger Band's distance is going to be relative to the movement, right? But that's the same with your E1, E2, E3. Everything is going to be relative to the movement of your volume on the day. They're all adaptive indicators, which is why they're useful in every market environment and when there are a lot of little changes, because you can see those same effects happen, and we're still able to trade maybe on a slower day than on the most busy days. We don't have to be overwhelmed by how massive these movements are in reference to our indicators. Our indicators also expand and open up to still give us valid information on the really busy days. Eleanor says, bring it. I think talking about futures. Yeah. Yeah, I'm excited to learn about that too. And like I think it's funny about futures because even options traders, which are kind of like known to be, understanding a complicated instrument, even options traders are like, futures? What is that? How does that? So like, it's like an abstract concept. So I'm excited to learn more about what they are and how they.
It is.
How they work.
It is actually too.
Yeah.
Before I learned futures, I was always an options trader, right? Stock and options, and futures always like this elusive little thing out there. And I always dabbled in it, and then finally we focused on it. I focused on it completely for over 12, 15 years, and it was like, oh man, this is really cool. And so everyone will see that's kind of another nice addition to your techniques that you'll have available to you to trade and make profit off of.
Yeah.
And there's a question there by Greg too that relates to the futures. He says, will the futures streaming charts be streaming 23 hours?
So, well, even the MMT charts are available, right? Just that the market's cut it off. So the market or the data for the futures that we've set up, through the toolbox there, you'll be able to have those charts 23 hours a day, as long as the markets are open, right? It'll be live data.
We'll have to have some serious conversations about not over trading, but yes, you will have access to them that much.
I've been for 3 days trading, man. I can't stop. Yeah.
My eyes are coming out my head.
We have futures addiction trading classes. Yeah.
Yeah, exactly. Futures Anonymous. Anyhow, so Mark, in one sentence, and even if it's oversimplified, in one sentence, what is a future? Even if you have to use like an analogy, what is a future contract?
The only thing you compare it to, let's compare it to something first. So if you look at an options contract, it's the right, not the obligation, to buy or sell a particular underlying asset over a fixed period of time, right?
Yes.
A futures contract, if you hold it and own it, you are obligated to exercise it. Either you're short or you're long, you have to go buy that stuff. So in our case, we never hold this overnight. The last thing you want to do is have to explain to your wife why you're going to take delivery of 10,000 barrels of oil this week and where the hell are you going to put them, right? In our case, we're doing cash settled instruments. So, like if you went to sleep and held this futures contract overnight and say the NASDAQ drops 100 points times 20, if you have one contract, that's 20 grand you're going to have to come up with. If you've got 10 contracts, now you have a $200,000 problem. So we don't hold these overnight because of that reason, right? There's just too much risk.
Yeah. So is an option to a stock as a future to a commodity?
So futures contract is to a commodity, right? If you're doing it a corn, oil, gold, silver, in this case, we're doing an index, it's settled. It's a contract, right?
Mm-hmm.
And you buy it, and you have the obligation then over that period of time, if it when it expires, the quarterly contracts, when it expires, then you're obligated to either take or sell that particular item.
Yeah. Hence, that probably even just encourages liquidity of it, but yeah. Cool.
It's very liquid, though, the market. Yeah.
Perfect. Thank you. Another one here. Hey, Lennon. I'm glad you're recovering, Joe. Micah, can you give us an idea of what Tim's new technique is, and is it a new service? I'm assuming we're talking about the technique that we revealed at the Masters. Is that correct?
Yeah. Hey, Michael, let me help you on that. What he's going to be doing, it is what we've been doing, but he's going to be giving one-on-ones like Randy, and so he's in other words, right now he's on the macro moment. He's going to still stay on the macro moment, but you'll be able to have one-on-one appointments with him and do the trades one-on-one.
Yep.
Yep.
Yes,
yeah,
exactly.
It allows us users allows us users to get personalized training, right? So they can enhance their abilities more quickly and get more profitable, faster than if they're just learning the technique from starting out from scratch, or even if you've been trading for a while, you'll pick up some new items that are going to help you be a better trader, I believe.
Mm-hmm. Yeah, and that's a program we'll be actually expanding on as we go forward. We'll have multiple one-on-one coaches and multiple schedules. That way, depending on the coach's specialty, what you need help with, we can really tailor that experience to help you the most. In addition to that, Tim's been working on a different pattern for Apple trading, but that is within MMT. It's still the same technique. There is just another movement. Patterns are kind of like the individual types of trades we do. Everything has very consistent rules, but the market moves differently all the time, right? So we have some prerequisites on if it is moving in this way, here is how we trade it. And that's, I mean, I would say there's pretty much 5 baseline patterns, right, Mark?
I'm not sure what baseline patterns you're talking about, but yes, I guess. The
Yeah.
biggest thing that he's introducing, though, I mean, is just this opening.
Yeah. Yeah. And
I'm saying that he's introducing this new gap open technique, which is the biggest difference that he's been researching and finding out that during the opening of the market, there's a gap opening down or up, and he's developed some techniques around that to take advantage of that quickly at market open, so you can profit from it.
Yep. Absolutely. Craig says firefighting trading. 2 days.
Yeah.
And 4 days out.
Yeah. Then there's a question. Oh, I'm sorry. Go ahead.
It'd be interesting, an interesting mental experiment to see what happens if somebody did that for a while.
Well, I'm sure the more you trade, the more
physical training too.
Yeah, I'm sure the longer you trade, the more fatigued you become, right? Just like your reaction time becomes lower, and so does your mental faculties, right?
Absolutely. How do we find out more about these one-on-ones? We will have a bunch coming through the pipe on social media. That'd probably be the place to keep your ear to the ground on it.
There's also isn't there a link on the website now, or not? Are they still developing that?
I believe because it's going to be a bit of a user interface type deal. We are still building that out. We have the structure for it, and we can send it live, but we want to make it just a really smooth experience to go through. So I believe we are.
But eventually, it should be a link where you can sign up online at the site, I believe, right? And then we would contact you and discuss
it will be on the
details.
website.
Yeah, it'll be like Randy's, where you sign up for Randy for a one-on-one. It'll be the same thing.
Okay.
Yes, it'll interact you with a calendar app that you can use to schedule your time and navigate that all.
Okay.
Online.
Okay. Yeah. Okay.
Yep.
And then for the futures class, I know there's a link right on the first page when you go to micromomenttrading.com if you want to sign up for that class. So.
Absolutely. Awesome. We also want to have on the docket today, Randy, you had a excellent presentation at Masters 2021. And it was in the Cow Report last week. So every week we release a Cow Report on Friday, and then we cover the topic in the Cow Report on this upcoming Thursday call. been published for over 20 years, and it is free and available. Oh, excuse me, coffee's getting to me, on our website. So feel free to go sign up for that. But Randy, do you want to give us a summation of what you covered at Masters, and a bit about what you're working on?
Sure. I mean, everyone's been noticed. I've been looking over here because I've been doing trades and sending out alerts for my covered calls. Yeah.
Do you want to give a summation of that too? What are you looking at in the moment?
Yeah, sure. In regards to the Masters, which by the way was just fantastic being able to get back in person and see people and bump elbows, shake hands, whichever that you were comfortable doing. But it was fantastic. All the presentations during the seminar were excellent way of learning more information, getting better education, and learning about new services and potential other ways to diversify your trading. So instead of just doing one specific trading process, which is fine, but there are multiple ones out there that can suit different needs throughout the course of the market and throughout the course of your trading life. But that was fantastic, just being able to be out there and in person again after so long of basically being cooped up in your office. But my presentation was about generating weekly income using cover calls. Whether they're the traditional stock-based cover calls where you buy the stock and sell the call to generate weekly income. And when I talk about weekly income, that means actual cash added into your account, not just a piece of paper, a number on a piece of paper going up and down, but cash being added into your account. Then you can use that cash either to reinvest, to leave in there just to grow, or to spend, depending on if you need it for actual income to pay bills. But
portfolio value is a much less concrete number on your screen. I mean, it's a number that's guaranteed to change every day. So,
yeah, and like Joe says, you can't take your broker statement down to Walmart and buy a loaf of bread. They won't do that. But cash in your account, you can take that cash and go buy whatever that you desire to buy for whatever amount of cash that you have. So I reviewed that, not only the traditional stock-based one, buy the stock, sell the call, but also the synthetic cover call that I've developed over the years and teach every Wednesday morning. And that's where instead of spending all the cash and the capital to buy the stock to sell a call against, that you can leverage that capital and use a very small portion of it to buy an option that gives you the right to buy the stock at a set price up to a set date, and then sell options against that for weekly income. And so I reviewed those processes. And so especially the synthetic cover calls would be the newer type of technique that some people aren't familiar with, and unless you've been to my Wednesday seminars, you wouldn't necessarily be familiar with that. But that's a good way of generating excellent returns on a weekly basis. And with the main technique that I use, that I call the modified CPR, you're actually out of the position in cash Friday evening, so you're not holding positions over the weekend. And especially weekends like this weekend, this could be a very exciting weekend. Who knows what's going to go on with the debacle that's happening in Afghanistan. And unfortunately, people are dying today in Afghanistan with these bombings that are taking place. And I'm trying to kind of keep up with the news on that. But it looks like there's been multiple deaths, like 15 to 20 people that have been killed already with these bombings, and many, many more being sent to the hospital. So that creates volatility over the weekend. You can't trade stocks or options over the weekend. And so it's great to be back to cash before then, because you never know, is the reaction going to be up or the reaction going to be down on Monday? And so it's fantastic to be back in cash before that. And so I reviewed the results of my actual positions in my service on Wednesdays. The covered call coaching service, I use actual positions in my portfolio for the examples. I don't just make up, you could do this or you could do that, or last year you could have done this, or 8 years ago you would have had these returns. It's actual positions that I have live in my account. Therefore, all of the people following along can put every one of those in their virtual trading account and follow along and learn every step process along the way without risking any money. And when I talked about alerts, which is what I've been sending out because I've already entered 2 new positions and done 2 managements just in the last 10 minutes. When I am changing anything in my positions, whether I'm adding a new one or closing out an existing one or changing something, I send an email out that says, this is what I'm doing. And so you can follow right along again in your virtual trading account, and you can learn hands-on step by step of actually doing it. So it'd be like learning how to hit a golf ball. You can watch videos all day, you can read books all day, but if you have someone actually out there on the golf course showing you exactly how to do it, doing it themselves, and then coaching you along the way, change your hand grip, change your stance, change your ball position, you're going to get a lot better much quicker, and you're doing it hands-on instead of just watching. So that's what the service allows. I reviewed the results then of all the positions that I've entered. I just went back to December 1st of last year and added them all up. And the results were through July 9th because the Masters was the next week. And 185 new positions I implemented during that time, which is what, 7 months, 185 positions. 87% of them were closed out in the first week, meaning 87% of the positions back to cash before the end of the week with all the capital that was invested back, plus the extra cash income in the account, 87%. The other 13% were closed using the management. Huh? What was that?
That was in how long?
Well, that 185 positions were over the course of 7 months.
7 months.
And typically I enter 6 or 7 or 8 positions a week. The average return on those, the profit produced, the average return is between 6% and 14% for the week of income. So if you invest 92 cents or if you invest 88 cents, you get $1 back, and that becomes a 13% return. That's the kind of implementation. Because I'm using an option instead of stock, I'm not spending $120 a share to buy the stock. It's 88 cents a share or $2 a share, which allows you to invest in things like Amazon that's trading at $3,321 today. I actually have an Amazon covered call open for this week right now at the 3,100 strike. I only have $2 and I think about $2.70 invested in. I'll get $5 back if it closes out, which is deep in the money right now. It's $210 in the money. I mean, Amazon would have to drop $210 tomorrow in order to not be called out and get all my invested capital back and have lock in the returns. But those are the kinds of positions I can invest in. Apple. I have an Apple position open. You can invest in $100, $200, $300, $400 stocks that you probably wouldn't be able to do if you had to buy 100 shares of the stock. You're talking about thousands and thousands of dollars, as opposed to buying an option that expires in the week and you're spending 80 cents or 90 cents or $2.10 a share of investment. And then the goal is to get all that back by Friday expiration. And as I said, 87% of the time that takes place, and those returns are locked in and the capital's back. The other 13%, I close out for a profit in the subsequent weeks using the unique management techniques that I teach. I teach you how to manage the position to continue generating income for additional weeks until it's closed out to get all the capital back. And all the rest of them have. that two of them have not, because they're implemented for a different purpose. That's the VXX, which is the volatility index that I'm still carrying forward for days like today or weeks like today, where all of a sudden the volatility spikes up. If the market goes down, the volatility spikes up, and then I'll be closing out that VXX position. In the meantime, I'm still generating 10 to 15% a week of income on the invested capital that I have in there. But that's what I reviewed during the master's seminar. Is I showed a little bit of how to do that process and the technique, and then answered all the questions that people had. Again, those are all things that I teach on my coaching webinar every Wednesday morning, 11 o'clock Central Time in the morning. So it may be in the afternoon somewhere, depending on where you are in the world, or it may be really early in the morning if you're in Hawaii. So, but that's a hands-on teach, exactly go through every single position, step by step, why it was implemented, what the charts look like, what the selection process was, what the management is, if required management. And because we use in the money. Now, this is one of the critical parts. We're not speculating. I'm not picking something that says this is the one I think is going to go up, and then it has to go up to make a profit. No. We use in the money covered calls for positive called returns, meaning that the stock can go up. Great. It's for sure going to get called out. The stock can just stay where it is. Great. For sure it's going to get called out. The stock can actually decline, and we can still get called out for all of our capital back and the profits locked in, because we're in the money. And that's not the normal technique that's taught by the market. That's not how the stock market uses calls, nor do they cover calls to the regular big traders, the speculators in the market. A covered call is kind of like a four-letter word. It's like when they have to say it, it's like it's hard to come out of their mouth, because they use it as a defensive technique for a stock that's dropping, that they don't know how to make a profit, but they don't really want to sell it. So then they sell a call to try to get some kind of income while the stock is going down.
Yep.
As opposed to just selling it for a loss. That's not what we do. We select a new position with the in the money covered call to generate the income on a weekly basis. And the process is to try to get out with your profit and all your money back before the weekend. I really don't, at this point in the market, years ago, back when I started back with Joe a long time ago, being in the position for a month was typical. So you're in multiple weekends, and it's okay. But it's so chaotic now with so many things that can cause the market to decline, that over a weekend, when you have no ability to do anything with the stocks or options, that it's much nicer to be out of the money. Now, what Mark does on a daily basis, and Tim and Joe and Cezanne, they're in and out in a minute or two. They're never even in a position overnight. They're 100% cash overnight. And what Mark's going to teach with the futures will be the same thing, in 100% cash every day, so that you don't have any risk at all for whatever happens overnight or whatever happens over the weekend. You just sit and wait, and then you readjust wherever the market is the next day. I try to do a similar type thing with the cover calls, in entering on Monday or Tuesday or Wednesday. In fact, I just entered a SPY position for today. If it closes out tomorrow, which I expect that it will, it'll be a 9.9% return for one day. In today, out tomorrow, back into cash, and then we'll reassess next week. And that's a nice thing about SPY, is it actually has 3 expirations every week, Monday, Wednesday, and Friday. So I can be in that position for just one day at a time, and reduce the risk. It doesn't eliminate the risk, because I'm still in it overnight, but at least reduces the risk that only one day's worth of events can take place that could be extremely detrimental to it. So anyway, that's kind of a rolled up into one, what I did at the Masters as well as what I currently do.
Marion sums it up. She says, "See what I mean?" Marion says, "See what I mean? Like I always say, Randy is a rock star."
Thanks, Marion. Appreciate those
He's called
comments.
a stock star. He's a stock star.
There you go. I'm an option star, right? But hey, but I started in 2006 knowing nothing, and have just with all the experience of basically doing covered calls has my source of income since 2007. I've just kind of learned a lot of stuff along the way, and developed some stuff as well. So
Definitely.
Yep, even you can start. It doesn't matter where you are in your knowledge. In fact, the less you know about the stock market and options trading, probably the better, because we kind of do it the opposite of everybody else. So you don't have to relearn it. You don't have to unlearn something.
All the stuff. Yeah.
That's right.
Yeah. There's a lot to unlearn.
Randy, even though you said, sometimes that. Yeah. Randy, even though you said that position goes down, it could be detrimental. We still have techniques. We manage it. We roll it out. We do things. So there's a lot of options still. It's not the end of the world for us, no matter what.
No. So I don't lose any sleep at night thinking what catastrophe might happen, to the world or the market. Hopefully that nothing does, but because I have a process to manage that. If it goes down, it's okay. In fact, in many cases, if it goes down, it actually makes a better position. So it works out good. I mean, it's a really nice whole process, and it's not just a speculation of one thing. It's a whole system, and that's one of the things that really sold me to go to the first seminar, was that it's a whole system. If it does this, you have something to do. If it does that, you have something else to do. If it does the other, you've got another thing to do. So no matter which direction that it goes, there's a next step involved with it to maintain generating income without we don't sell the stocks for a loss. That's just what we just really don't want to do that. And so we just keep generating income while the stocks are going up and down.
So let's do a flash round. What is one thing from each of you that, say you've been trading for a year and a half and you are transitioning in MMT, whatever. What is one thing you need to unlearn from the standard methods of trading? Like, if you're just doing your thing, what's one thing from each of you that you need to unlearn as fast as possible? Joe first.
Okay, I'll go first.
Please.
Stay in when you should be getting out. That's the biggest thing. We're trying to make a few cents, and by the times you get in, the light was green, it turns red, and you're 2 or 3 cents behind. You say, I'm just going to sit here and wait for it. I'm going to wait for it. I'm going to wait for it. And pretty soon it's 20, 25 cents. It's a huge loss. And you get in, and when it turns red, you get out. It doesn't make a difference if it's a penny loss or a 2 cent loss. You just go ahead and get out, because you're going to be back in it again in a few minutes or a few seconds. And that's what I have to say.
Absolutely.
I'll add, follow the rules, because everything we teach has a set of rules, and you have to make sure you follow the rules. You got to take the emotions out. You got to quit thinking, I think I know more than whatever the market's going to do. You follow the rules. If you learn the rules and follow the rules, and each one of the different techniques has a different set of rules. You follow the rules, you'll be successful.
There you go. Mark, did you hear the question? Oh, you're muted. Mark, you're muted.
Sorry.
There you go.
Yep, got it. Think about
it's like that. It's like that Workday commercial, right?
Yeah.
The Workday commercial on TV. No, Mark, you're muted. Oh, okay. Hello.
What? Yeah. But to get back to this, so I'm learning, I guess, some of the stuff I see people go out there and try and learn, and they're trying to take these trades, no matter what techniques they think they can swing for the fence sometimes, They get kind of greedy, I think, and they put these positions on. And like Joe's saying, they apply this also, wait, and it's going to get better, In the meantime, they take this loss. But, it's going out there with the systematic approach and, taking small steps to start with and learning these techniques that we're teaching here. There's a lot of different techniques out there. People come in, biased about the market and think options are evil and, how they're going to destroy the world. So some of that needs to be unlearned. And as long as you have these techniques, that's what it comes down to, that you can manage these positions and just slowly, learn the technique, try one contract, try 2, 5, 10, whatever you get up to, and practice these until you become really good at it.
Yeah.
And don't expect, to make $1 million the first day out there.
Yeah, let me give an example. Today in Mark's trading, 15, 16, 17 transactions, he had 2 losses, and he made huge amounts of money. He had one for 0.00632 of 1%, teeny tiny, wow, and he had one for huge amount, 1.74%. I mean, that's seriously, that's big. But
as far as little losses, right? The rest
virtually nothing. But at the end of the day, we still made 50% so whatever. So.
Yep.
Right.
Yeah, that's fantastic stuff. I feel like there is a lot. I feel like we could do a podcast episode on that of debunking a lot of different things that you learn when you step into the market, right? And all of these perceptions that are kind of forced on you, and that
I think one of the
you should buy this or sell this, or all of these, not even necessarily individual opinions, but how to trade.
One of the biggest overarching things that you really have to get rid of is everything you hear on TV and what the market says. It's all speculation. You have to get rid of the speculation mentality, because we don't do anything that's speculation. Everything is rules and chart. What Mark does on every day, every morning, and what he's going to be doing with the futures, it's the intraday streaming chart that allows you to do that. You learn how to read that chart, learn when it says this is the right time to enter, exit, and then follow the rules for doing that. Where everything you hear on TV, it's all, hey, we've heard that this is going to happen, and look at all the activities, so we're going to go do this. It's like they don't even look at a chart. They don't look at fundamental. They're just speculating that something's going to take place. 80% of the time they're wrong. The CBOE that tracks all that stuff, 80% of the time they lose their money.
Yeah.
And we don't do that. So you have to get rid of that speculation mentality, and especially the new students that come in to start learning cover calls. They got all this, the gammas and the thetas and what if this is, and it's like, no. We just learn the rules. We learn how to read the chart. We learn how to look at the selection criteria, and then we follow the rules. We're not looking at all this speculation. And that's a big thing that they have to unlearn especially when they're just coming in.
Yeah, let me follow up on that. He hit it on the head. The chart, the most basic thing, nobody looks at charts. But if you look at that chart, and we go through this, and like this last weekend, the 2-day covered call seminar, you teach that chart. You look at that chart. It doesn't make any difference if the stock's going up or down. You don't know which way it's going. But if it's going up, you're going to enter the position. If it's going down, you're not. But even when they're going up, the chart going up doesn't go straight up at 90 degrees. It goes up. The highs get higher and the lows get higher. You want to enter on what's called a V at the bottom, because you look at the chart. It's going to go up, and then it's going to go over. It's going to come back down. You're going to buy that thing back, for less than you sold it for, and so on and so forth. It's just so simple, but nobody looks at charts.
Yeah.
Joe, you're absolutely right about the charts. I ran into somebody I work with, and he talked about, I just want the stock, and I was like, wow. So what the chart look like? And he's like, what? So he didn't even look at the chart, but went and bought the stock just because everybody else was, I guess. It's just crazy.
Mm-hmm.
Yeah.
It matters, man, and it's quite revealing. It's just, we could talk about charts all day specifically. It's kind of a debate, obviously, between technical analysis and fundamental trading, but I hold the opinion, and it's always kind of, if you look into the world of trading, it's those two sides. And for me, it's like one's a shape and one's a triangle, right? Technical analysis trading is kind of the shape, and all triangles are a shape, and not all shapes are triangles, right? It's kind of encapsulated in one and not in the other, because in technical analysis, fundamentals are, that's almost like the intro to technical analysis. But if you're just a fundamental trader, more speculation, and don't use technical analysis, then there are things you're missing, right? That you just don't get because you don't know where the high is, you don't know where the low is, you don't know what happens statistically every time. That's what it's about, right? It's about the amount of time that this happens. That's the way we present techniques at Masters about anything. It doesn't matter what we think or how good we feel about a technique or how fun it is or how cool it is. It matters that 91% of the time this happens. And it does. That's not us. That's not, we realize that we don't have this immense power over the market, and we can't bend our finger and make it go up or down. But 91% of the time it does this or it does this. And that's something we can track. That's something we can make decisions based off of, informed decisions. So yeah, huge differentiation. Thank you guys for explaining that. That's really good. That's really good. Awesome.
I want to make a update correction. What I misspoke slightly about my Amazon position for this week. It is at the 3,100 call, so it has $210 that it can drop, and I get called out. Last week's position was the 86.4% return. This week's is only going to be 15.6% return as long as it stays above 3,100, which again is $220 from now. So it would have to be a big implosion tomorrow or later today for Amazon to drop $220 in one day. It can happen.
What's the current price on it?
The current price is $33.23.65, okay. and I'm all the way down to 3,100.
Yeah.
And as long as it stays above 3,100, I get called out, get all of my capital back, which was only $8.65 per share, even though it's trading at 3,100. It was trading at 32 something at the time. It's 3,300 now, and that'll be plus I get back $10, which will be 15.6% return for 1 week of investment, and then back to cash on Friday night. Nothing to worry about over the weekend for that. And then next week I'll look at another one, but it's all based on internet, the right place on the chart as well.
Yeah, that's fantastic. Well, thank you for the clarification.
Chart
I
ski.
appreciate that. Yeah, chart ski.
Yeah,
absolutely. Well, if you guys are on any social media, we probably are too. Just type in Micro Moment Trading to the search bar, and we'll come up. Been doing a lot of different content. Posted a new video on TikTok yesterday. That's doing really well. About it's a combo trade. I don't know if I've had time to include both exits, but it's a combo trade of Mark and Tim working off each other. Just massive returns happen really quick.
Mike, how are the observations going on the TikTok?
The observations?
Yeah, for people look at it.
Oh,
the views.
Yeah.
TikTok.
Yeah, the last 2 videos had 600 and 700 views.
Oh, great. Fantastic.
Yeah. So
Super.
we're getting some traction. And we're working on trying to get some face cams like this with the teaching as well. Not so much with the teaching, but so that when we have a video, we have the video of what they're doing, and also you can see them talking like when we come on here. So yeah, working on some different things for that. It'll be really exciting. So yes, futures is September 11th. We'll talk about that more. And potentially, no, we'll talk about that when it comes. Awesome. Well, thank you everyone for being here. We will be here 1 week from today at 10 a.m. Central Standard to chat some more.
Okay.
So
Hope
everyone has a good weekend.
Thank you.
I'm off to baseball practice. Got to keep practicing, getting ready for the
Absolutely.
championship.
Good luck. All right.
Good luck.
Take care.
Take care.
Hey, thanks for being here, guys.